Hey everyone, Bryce Greenleaf here, your real estate agent with Skyline Properties in the greater Seattle area. So today I wanted to talk about mortgage interest rates and specifically how interest rates affect your monthly payment. So let's just jump right into it. So as you know, interest rate is a very important part of your mortgage. They make up a big chunk of that principal and interest payment amount. Now you've probably heard that interest rates are at all-time lows and they keep falling. And in fact, interest rates have set record lows 11 different times this year. That's just absolutely insane. So interest rates are at a perfect spot for home buyers. Now I know the market is really competitive and it makes it a little bit more difficult for home buyers that way because it is a very good seller's market in terms of getting top market value for your home and a lot of bidding wars happening. But the reason it's also such a good time for buyers is because of these interest rates. I mean, we haven't seen interest rates this low. I mean, if you bought 2 years ago, you were likely paying 1.5% to 2% more on your interest rate than you would be right now. And that was just 2 years ago. Now you're probably wondering, well, how much does an interest rate actually affect what your monthly mortgage payment is gonna be? And it affects it quite a bit. So let's break down a scenario here with a $500,000 mortgage. So right now, interest rates are right around 2.8, 2.9, 3%. Right in there is the average home mortgage rate right now. As you can see on this graph, it is continually falling and we are at another record low. So for the sake of this scenario, let's say that you can get your interest rate today at 3% on your $500,000 mortgage. So your principal and interest payment with this 3% interest rate is going to be $2,108 a month. Now let's compare this to if you had bought a little over a year ago when interest rates were closer to 4%. And so let's say your interest rate for this $500,000 mortgage was 4%. Your monthly principal and interest payment would be $2,387. So as you can see in this scenario, a difference of 1% in your interest rate is a difference of about $279 a month. Now let's do this at 5%. Like I said, about 2 years ago, your interest rate was gonna be hovering in the high 4s to the low 5s. So let's say in that scenario, if you bought a $500,000 house 2 years ago at 5% interest rate, your monthly payment for principal and interest would have been $2,684. That's a difference of $297 a month from the 4% interest rate. And so you can also see a difference in 2% interest rate from the 3% to the 5% is $576 a month. Now this is a large chunk. Of course, this is something that you really need to consider in terms of the timing of when you're gonna buy a home and why, even though it is competitive right now when you're shopping for homes and you're putting in offers, it still makes it a great time because of this interest rate. Now we don't know how long this rate is gonna stay. You know, people can try to predict it, but nobody knows for sure. And so for many people, they're choosing to take advantage of this rate right now because we have no idea when it could possibly get this low again. So if you're thinking about buying a home in the greater Seattle area, King or Snohomish County, feel free to reach out to me. You can contact me at my number, which is here on the screen. You can call or text me. You can also DM me on this platform that you're watching this. I'd be more than happy to answer any of your questions and get you started on the process. Thanks for tuning into this one, guys.